Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. A good Thursday morning, given the fact that global cues are extremely strong. There is some bit of certainty, with respect to Fed's interest rate cut trajectory, as well as the GIFT Nifty. If you look at that, that's hinting at 22,000 levels back on the chart. So lots of positive cues to digest. We have lots lined up over the next 40 minutes or so. We have a global voice to understand what to make of the Fed's dovish statement, so to say. We will be joined by a fairly big market guest. Sushil Kedia, founder of Kedianomics, will be joining in and sharing his thoughts on where the markets are headed. And of course, we'll have a technical analyst to understand and decode all the stock related queries that you have, and of course to see how the market setup is looking like for today. But without any delay, let me bring on board Peter Mcguire of Exim Australia, joining us live to understand what to make of the Fed statement. Great to have you on the show, Peter. The message was fairly clear that even though the job market remains hot, that will not deter the Fed from cutting rates, right? And he has hinted at 3 interest rate cuts this year, that is in line with the dot plot. Markets, you think the markets are relieved and that's why we saw a relief rally play out? And B, do you see more legs to the rally in the equity markets?
Well, good morning, Nandita, and lovely to see you from Sydney. Yeah, a couple of things. First off, yes, there's no doubt about that as far as the 3 rate cuts. It was very convincing, and not only convincing, but also 67% of analysts are now saying we're going to see it in June as far as blast off. So there's your first one, and they'll have to be careful as far as timing because you've also got an election early November. So from a political standpoint. Now, the second part of it is, yes, gold was bid up. US dollar came under pressure. 2-year yield was pushed down about 7 basis points. And the S&P 500 closed at an all-time high. So that tells me there's a lot of confidence. That confidence is also washed across Asia markets because Australia's well up and Japan's well up as well, and Hong Kong. So it seems to be a little bit of a positive sentiment that's sweeping the markets.
I want to quickly get in your thoughts on oil prices as well. We've seen a resurgence of sorts, right? It has touched $87 a barrel. Do you see crude heading towards $90 pretty soon? And if yes, is this a transitory move, or do you think $90 will be the next normal for crude prices?
Well, I do think it'll trend up and it'll probably take out 90. I'm not sure as far as timing. There was the way it was moving as of the early part of the week, and certainly over last week, everyone thought that it might even get there by Good Friday in the sense of Easter. So that's only a bit over a week away. And the overall, I think, push to the upside has been very, very strong buying. And we're all very conscious as far as, global picture and what OPEC's positioning is. So, yes, I think probably so. I won't be surprised sometime in April to be above that 90 handle. And let's just see how it goes as far as summer driving season in the Northern Hemisphere as far as consumption and so on.
Right. Also want to get in your thoughts on, what the BOJ, the Bank of Japan, has done recently. They've hiked interest rates for the first time in 17 years. But the yen has been weakening, ever since then. Do you, expect yen carry trade to not lose appeal, even though the Bank of Japan has acted on interest rates?
No, I think it will still be a very attractive trade, but the other side of it is that, yes, you're back at zero, and, so it was a celebration, and I suppose they've got to be applauded for doing it. The other side is you had very strong wage negotiations in the first part of the year, which is a strong point as far as consumption, and will be a strong point as far as consumption, and great for, the workers and the employees and so on. And then the next part of it is, yes, the US dollar, well, it bounced to the upside and then the yen was sold off. The yen's given up a little bit, but it's still running, I think at the moment, the best part of about 150.4 against the US dollar. I wouldn't be surprised to see some intervention from the Japanese, but we'll just have to see how the BOJ plays. They've had a very busy week, Nandita. You wouldn't expect 2 big surprises from the Bank of Japan in a couple of days, would you?
Right. Lastly, gold is shining at fresh highs, and Bitcoin, it has hit a fresh high recently, although cooled off a bit. But for these 2 asset classes, what are your thoughts? Where are they headed?
Well, gold's really been strong. I mean, it's sitting at just under 22.30 at the moment. It's had pushed up over 2% overnight. So that was its thoughts as far as Fed Chair Powell. And it may have a little bit more horsepower to the upside. You could see some profit taking, but it's been dynamic over the last couple of weeks, the gold market and silver, don't forget it. The other side, as far as Bitcoin's concerned, it's volatile. It was up at 73, down at 62, back up at about 67 now. So it's choppy, and I still believe that its best days are ahead of it. I was talking to you about, 4 weeks ago in Mumbai together, and I said keep an eye out on Bitcoin, and I wouldn't be surprised that, by month's end even, that it'll be higher than where it is at the moment.
All right, Peter, with that, I'm afraid we are running out of time. But of course, next time you're in Mumbai, don't forget to, touch base with us. We can have a chat in our studios once again. But thanks a lot for taking our time and joining in and, sharing your perspective with us this morning.
Cheers.
Well, with that, let's focus in on the market technicals. Then just about 3 minutes to go for market opening. Let me get on board Chandan Taparia, who's the Senior VP Head Derivatives and Technical Research at Motilal Oswal. Great to have you on the show, Chandan. Looks like we are poised to reclaim that 22,000 mark as the GIFT Nifty is hinting. What are your thoughts?
Thanks, Nandita. Thanks for having me. And it's great to hear Peter to know about the Fed outcome and about the global market. So talking about the Nifty, we witnessed some profit booking of around 800 points all the way from 22,526 to 21,17 zone. Technically, it formed some sort of reversal candles and supports are intact. Even put writing is visible and VIX is not inching up, that is falling down, which indicate that some sort of stability could be there. And again, global indices are holding well, and because of that, we can see some recovery. So I'm expecting at least 50% recovery of the recent decline, which comes at 22,122 marks. So I believe with support of recent bottom, Nifty has potential to bounce to us 22,122 levels. Talking about Bank Nifty index, in the recent past, it corrected by more than 2,300 points. And now it is holding well above its rising support trend line. We witnessed consecutive follow-up last 9 trading session, and now a small follow-up could even trigger for short covering as we are heading towards the monthly expiry week. So because of that, with support of 45,750 or 46,000, Bank Nifty has potential to bounce to us 47,250 marks.
All right, expect a bounce back on the Nifty Bank Index as well. But very quickly, as we head into market open, how are you positioned for the day? What are your top recommendations?
So talking about trading ideas, I'll focus on the selective name which are doing well comparatively, looking for the relative strength. So we'll suggest to buy on Maruti with support of 11,700. It has potential to move towards 12,500. Cummins looks good, looking for an upside move towards 2850, and looking for some reversal in State Bank of India. SBI was continuously making lower top, lower bottom, but on last trading session, it formed a bullish candle and now it's negating its lower top, lower bottom and turning from key support. So expecting a rally towards 765. So Maruti, Cummins and SBI are a couple of names which are likely to see some uptick led by short covering, and strength is clearly visible in all these names.
All right, those are the picks, but of course, that's the opening bell for you. 22,000 on the charts, driven by strong global cues. We saw Wall Street hitting fresh highs, and the sentiment is being mirrored on the Lal Street as well, just around that 22,000 mark as we speak. But let's see what the broader end of the markets are doing today. The Nifty mid-cap index is up 1.5%. So good strength coming in there, in the broader end of the markets as well. Let's see what the small cap index is doing. Small cap index has been ending in the positive zone, although, pretty much flattish, but the index per se has been ending or closing with the positive bias. And today as well, 1.5% kind of uptick on the Nifty small cap index. Nifty Bank Index has snapped out of a 9-day losing streak. 1% gain coming in there. Let's see whether or not we'll be able to reclaim that 47,000 mark in today's session. PSU Bank Index looking strong. Let's see what the auto index is doing. Yesterday, remember, most of the Nifty gainers were from the auto pack. IT 1.5% kind of gains. Auto, of course, 0.7% kind of gains coming in there. But let's also take a look at some of the gainers and losers on that note. Metal shining bright. Gold, remember, has hit a fresh high in the international market. From the Nifty gainers, the top movers are from the metal pack, Tata Steel, that's the top one. BPCL, yesterday, it had snapped out of a string of losses. Today as well, among the top Nifty gainers, 2.5% kind of gains coming in there. JSW Steel, IndusInd Bank, Coal India, and even, beaten down IT names are in the green. So Wipro among the gainers, and so is HCL Tech and Infosys. But on the flip side, losers are few and far between today. Just 4 losers on the Nifty. Nestle, Britannia, Dr. Reddy's and Hero Moto aside of that, it's a sea of green. Markets will be relieved given the kind of volatility we've seen. Let's see whether or not this, this up move that we are seeing will sustain or not. I'll be joined by a very big market voice in just a few minutes from now. But let's also pull up a TVS Motor and see how that stock is doing, because TVS Motor, in fact, has said that it will come out with a preferential bonus issue worth 1900 crore rupees, and that will be, of course, from the company's reserves. So let's see how TVS Motor, it's 1.5% up, in line with how the other auto majors are doing. But Chandan, coming to you, how are you viewing TVS Motor on the charts?
So, if you look at the Nifty Auto first, most of the auto stocks are now witnessing buying interest. Major trend is intact, and after the corrective move of last 7-8 days, most of the stocks are likely to witness buying. Already I talked about Maruti, which is the preferred pick. But yes, TVS Motor, we should keep on radar, expecting recovery after the profit booking of last couple of days. So looking at the stock price setup, I believe 2000 or below 2000 is the support, and it can bounce towards 2130 levels.
Right. What about a BSE? We have an upgrade coming in from Investec this morning. The stock already was up 4% yesterday and today as well. It is extending those gains, 3.5% kind of an uptick coming in on BSE. Would you expect a retest of 4,500 anytime soon?
You're talking about 4,500 in BSE.
Just hang on. I think I've got the price wrong here.
So let me.
Sorry, it's 2,500. My bad.
Yeah. So if you're looking for really next 1 year or 2 years, I think the level which you talked about, 4,500, would be possible in the BSE, because you are quite bullish if you're talking about the long-term point of view. But yes, on immediate basis, we are expecting a rally towards 2350. I can give a couple of reasons. First, nowadays we see huge activity in weekly expiry, and BSE now among quite active in weekly expiry, especially Nifty, especially on Sensex on Friday and BankX on Monday. So volumes is there, depth is clearly visible, and all these are likely to reflect in the price as well. Talking about technical setup, 2020 is the support. We are expecting a rally towards 350. If someone is looking for positional point of view, then definitely it can head towards 2,500 and positional towards 4,000 marks with the view of 6 months to 1 year.
Right, let's take up some viewer queries then on that note. LIC, Anindya Banerjee wants to know your thoughts on this particular stock. It has come under, a fair bit of pressure after, crossing the IPO price and doing pretty well. It has been in a downtrend, all of this month almost. So for LIC, any thoughts? Should one utilize this dip to accumulate, or how would you suggest one navigate this investment?
So I think better to wait, let it stable. I think as of now 850, 840 is the downside support. So I think let it correct more, then go for bargain hunting. So I'll wait and watch, or otherwise if it moves about 910, 920, then only the stability will be back in the counter.
All right. The next query is on Reliance Industries. It may have cooled off from record levels just a bit. But I have a query coming in from Naveen Tyagi. What would your short-term view be on this stock?
So, can you please repeat the question? Name of the stock?
Reliance Industries.
Okay, so he's talking about the market heavyweights Reliance.
Yeah.
Yes, major trend is positive. If you look at the stock for last couple of years, from last 7th or 8th consecutive year-on-year basis, the stock is delivering the gains. Now talking on immediate point of view, recently corrected towards 28, 25. There is the major support, and with that support, it can head towards 3020.
All right. Hold that thought, Chandan. We'll come back and talk to you about more queries and more stocks. But let me bring on board the big voice that I promised you at the start of the show. Joining me is Sushil Kedia, who's the founder of Kedianomics. Joining in. Great to have you on the show, Mr. Kedia. Welcome. I think this is our first conversation, one-on-one conversation, so to say. Looking at what's happened in the global markets and the fact that we've reclaimed that 22,000 mark, now that Fed is out of the way, do you expect the Nifty to hold on to these gains, or do you think the setup looks fairly volatile even now?
Volatility is one thing, holding on to the day's gains is one thing, and what may be much more important is, are we going back to a new high?
So do you
So-
think we are?
Volatility typically will appear to be larger when a short-term trend is about to reverse. We had a 700 points correction on Nifty. Rise in volatility here and a resolution on the upside are all coincidental, which is how markets move. I'm anticipating now, should we achieve today a close above 22,100, I'll be gunning for a new high on the Nifty. And new high on the Nifty apart, just a couple of minutes ago, you were discussing BSE with some other guest. Yesterday only we called in our clients suggesting an up to 50% further rise in both the prices of CDSL and BSE by the time monsoons have arrived, next 4 or 5 months. Earnings बढ़ेगा, उसके बाद सब पढ़ा लिखा लोग लेगा और उनके लेने से ही market बढ़ेगा is too much arrogance. Markets will reward those who will anticipate and speculate in advance. So the charts of BSE and CDSL suggesting to me a huge round of upward move across the board on smaller stocks is coming. That's where the big money is going to be. Index has almost run its course. Another 1,000 points on index is only 5%. But on stocks like a BSE or a CDSL, when you get 50% returns, or on a number of chemical stocks or on a media stocks, where you'll see 30 to 40% returns. So that's where our trading focus is.
So within the media stocks, which one would you prefer now, Mr. Kedia, now that you mentioned the media pack?
See, fundamentally speaking, you cannot be a good trader. You have to be a good investor on fundamentals. They are so deeply oversold that despite all the controversy surrounding Z, we are waiting to have a buy signal on it. Or, a number of other smaller stocks in there. So across the board, I think in the media and entertainment pack, without the granular stop losses that one is used to, there will be spurts and jumps across the board on all media stocks, including Z. So nothing really to differentiate, jisko jo pasand hai le.
Okay, let's also talk about the PSU basket, right? We've seen a fair bit of correction play out, but which are the pockets that, warrants a re-entry at the current juncture? Would you say defense, railways, anything that's catching your fancy?
Most of the PSU stocks that have gone through obscene excesses on the upper side are looking to top out in the long run. And one round of deep correction that has come does not look like that the last stop that we saw was a final. So maybe, we go back to retest that prior high on many stocks and maybe make some minor higher highs than them. So it's pretty much across the board. But out of that pack, the one that we find good reasons to legitimize are the oil marketing companies. I think a big slide in crude has just begun last night. While the street is worried about 90 ho jayega, 90 is just a few dollars. I'm looking at crude slipping down to 62 or $64. And yesterday's price action suggests that this big down move on crude may have just begun. So there's a big bounty to be made in an HPCL, BPCL, IOC. And that's where we are positioned long already.
Okay, but let's also talk about autos then. Maruti saw a big move yesterday, 12,000 was crossed. But aside of Maruti, is there anything that you like within the auto pack, two-wheelers, four-wheelers, be it anyone?
The auto pack is dangerously overbought. It's dangerously overpriced. And it's dangerously popular. Nobody will dare to say that, there will be a deep correction in autos. So not because we choose to be contrarians. We are the scared people. Kedianomics is always scared. We are uncomfortable being part of a huge crowd. Hum side mein baithe hain autos mein. And as soon as any signals come on them, we will again be shorting them. Except for Tata Motors. I think I'm waiting to find a short signal in all the autos. See, if Nifty rises, say about 5%, all the sectors are not going to rise. Some will fall 5% and therefore it will create space for some other sectors to rise 10%. So I think autos is going to be the underperformer. That's the thesis we are working on with. And time to time to hedge the long bets or to even outright take short position when markets do find a few days of corrections in between. It is the autos that we are going to try short selling again and again with whatever stops.
Okay, autos looking overbought, but what about Pharma and IT? They have seen a fair bit of correction. Do you think this correction should be used to get into some of these large cap names within both the pockets?
In Pharma, we will strictly avoid touching any larger names on the upside. Dr. Reddy, Sun Pharma, Cipla temporary rebounds is one thing, but it is better to wait for those temporary rebounds of few days to play out and then again go short on them. We will not touch a single share in the smaller space in pharma, and we'll continue to ride them for the next 6 months view. No trading in the smaller names. We'll continue to hold on to them, and we will time to time keep making effort to find short sell signals in the large cap fund. IT is somewhere in the middle of the road. I think it's just going to be a trading bet in line with Nifty. So a Wipro or a Tech Mahindra or even a Infosys going up 7-8%, while Nifty goes up 5%. Small outperformance over Nifty on the trading horizon of next 2 weeks is what I look at the large IT. So again, they're smaller IT names. We are not trading. We'll continue to hold on to them irrespective of any volatility that comes in for very large gains over the next 6 months.
Right, FMCG as a pocket has seen a consistent underperformance. Since we are talking about the defensives, how would you really approach the FMCG pack now? The likes of HUL, even ITC, there was a bad stake sale. So how are you looking at these large cap names?
Allow me to get away with some chaste Hindi. Agar kahin malai hai, to ab FMCG mein. At those stratospheric levels towards which markets are going, time to time, the sensitivity of investing minds, particularly the institutional minds, will be a little overreacting to any global macro developments, geopolitical developments, anything. And, the safe haven money, those PMS managers, those SIP flows, those, cash flows that come into the FPIs that they must put into the markets. So even on sad days or worried days of the markets, the safe haven buying into FMCGs is going to create a continuously upward trend on them now. The charts are very well positioned across the board on all the FMCG names. So the sweet spot of the markets in this next 1,000 point on Nifty up appears to be FMCGs or consumers.
All right, if I want to, we spoke about a lot of sectors, but if I want you to pinpoint one sector that should be a must-have in your portfolio, would you name banks, private banks among them?
No, private banks are not a must-have. They will be the underperformers.
Okay.
So something like a must-have is a slightly obsessive attitude. Market में must-have कुछ नहीं है. सबको नरम रहना पड़ेगा, humble रहना पड़ेगा. But yes, a compelling proposition, if my mind will accept that as a kind of psychologically appropriate term, then stocks that have been badgered down already out of favor, the chemical stocks, that's where I would keep on selectively nibbling in. Because do whatever you may. Business is actually simple. You make money only when stocks you buy by buying them cheap, and you make that money and bring the cash home when you sell them when the stocks are dear. Chemical stocks have become relatively much cheaper on the P ratios. Well, fundamental arguments may continue that they are still at a very high level of P ratios. But technically speaking, the relative valuation of those stocks on the 6-month speculative horizon is, I see outstanding superlative returns arising out of the chemical stocks across the board. So that is one sector where we will continue to keep pushing larger and larger amount of cash into our delivery-based buying recommends.
Okay. If I ask you your thoughts on HDFC Bank now, how would you really view this? Do you think, one should look at it now, or do you think, since you said that, nothing is really a must-have, in your portfolio right now, or, when the markets are such, are volatile, you need to be a little nimble. So, with respect to an HDFC Bank, how should one tread?
The investment honeymoon, or even, the happy marriage days of investors in HDFC over the last 15 years is over. It's been in a wild, volatile trading band for the last 2 years. And within that, we are at the lower end of that band. So relatively on a trading/speculative horizon only, HDFC Bank is preferred on the long side. But, the very popular idea that your neighborhood pan wala, your newspaper wala, everybody knows long-term investing karne ke liye HDFC Bank le lo. So then there is nobody else left to buy it for the long run. So I don't want to mix my words and leave any misimpressions. We are very bearish on HDFC. Over a 5-year return horizon, paisa nahi banega. But in the short run of next 3 to 4 months, HDFC Bank may surprise people on the upside on a short-term trading and speculative horizon.
Metal stocks are trying to make a good rebound now. Any scope of money being made in the metal pack now?
No, we will wait and let this metals rally in sympathy with the broader market pass by. Apart from autos, that's the second space where time to time we will wait to find short sell signals. If we don't find them, no problems. We have got enough, more than enough opportunities elsewhere. Nobody has got infinite cash or risk appetite. The best sectors for being long, we've discussed already. And metals is my, the second worst in the pack sort of ranking order at this moment. Whenever we find sell signals on autos, we'll reserve those stocks for playing the short side. We are right now not obviously shorting anything, but we will not put any money on the long side on metals. It's an overdone story.
All right. Lastly, Mr. Kedia, from now on till election, which are the pockets that are on your favorite list right now?
See, the reasoning mind, a mind that will not be able to take decisions until its ego-driven intellect is satisfied, will keep on, rationalizing many things. But those who are humble, because there's no money in ego, whether ego is born out of intellect or ego is born out of misperceptions of one's life, ego is a losing proposition. So keeping that aside for a moment, or rather originating from a non-ego based driven decision, stocks जो बुरी तरह पिट गए हैं, P group के stocks, media के stocks, chemicals के stocks, because business actually is very simple. Whether you have arrogance or you have intellectual arrogance, both will lead to losses. So मीडिया के स्टॉक्स को अचानक एडवर्टाइजिंग मिल जाएगी इसलिए अगले एक महीने में मीडिया के स्टॉक्स बढ़ेंगे. That is not fundamental analysis. That is fundamentals. So keep it simple, stupid. Keep it simple, stupid, as the US Army says it. जो बहुत गिर गया और अब दिन में buy signals आ रहा है. So we'll continue to focus on a number of media stocks, chemicals, trading rebound in the PSU still, it's not fully done, and FMCG space, दोनों हाथ से.
Right, since
इलेक्शन के कारण कोई स्टॉक बढ़ेगा is I think trying to act too cutely intelligent. इतना ज्यादा बुद्धिमान नहीं होना चाहिए इंसान.
And what about Paytm then? Would that feature on your list or is it a complete avoid?
Paytm is a challenging stock. चार्ट बेचने नहीं देती है, माहौल लेने नहीं देता है. मैं तो पैसे कमाने हैं, स्ट्रेस नहीं लेना है. I want to avoid Paytm.
All right, avoid Paytm. That's the word then. With that, Mr. Kedia, thanks a lot for taking our time and joining in this morning and sharing your thoughts with us. Look forward to having a longer conversation with you sometime soon.
Sure. Pleasure was mine.
All right. Well, with that, let's go back to Chandan then. Chandan, couple of queries coming in on Zomato. Vijay wants to know your thoughts on this particular stock. Any level in your mind when it comes to Zomato's chart?
Yeah, so I like the stock and recommending from last couple of days, expecting fresh leg of rally. The good part is we witnessed some decline in last 2 weeks and that recovered well, which clearly indicates the initial strength of the counter. So inherent momentum could continue with support of 166. One can ride the move towards 175, 182 levels.
All right, that's the view on Zomato. Hope that answers your query. But the next query is coming in from Satya CK. And he wants to know your thoughts on a Century Textile. Stock is doing pretty okay today. In fact, last 5 days as well has been fairly sideways but has held on in the positive zone. How should one really navigate this stock if they have it in their portfolio?
So I think it's a range bound. So one need to follow the range. Downside support comes at 1300 and immediate support goes at 1385. So he can put support of 1385 to play the swing towards 1520.
Pon Rajesh wants to know your thoughts on IREDA. Of course, the stock has, had a very good run after its listing. In the middle, it did see some bit of correction. Last 1 month, we've seen 20% being shaved off. But do you expect levels of, 150, 160 in the coming days? Or do you think there
now
is
I believe some sort of recovery could be there. He can hold the position with support of 125, expecting a bounce towards 114 in the counter.
All right, hold, IREDA, that's the call then. Aside of that, Som Mendigar wants to know if it's a good time to enter into ITDC. If you track the stock, would you advise him to enter?
So I'll wait for some more decline. I think 570 will be the right level to buy the counter. So let it correct, and near 570, 560, he can go for long position in this stock.
You know, Tata Steel continues to be on an upward trajectory. Here, right now, I think it's up somewhere around 4%, 150 kind of levels. But would you call it, would you go as far as calling it a breakout stock now?
Yeah, so Tata still not breakout, but range bound supports are shifting higher with support of 145, can look for 157.
All right. What are your thoughts on tyre stocks? We've seen some bit of weakness after rubber prices have, surged globally. So for tyre stocks, how should one hold on, or if they are making a slight loss, would you advise them to book losses? How should one go about it?
Yeah, so talking about tyre stock, I think selective stocks will do well, but profit booking is clearly visible. MRF can drip down towards further 4-5%. Even if you look at Apollo Tyre, some sort of more decline could be there. So as of now, I'll avoid tyre name because of the crude prices. All these stocks are likely to remain volatile. So better to just stay away as of now.
All right. We spoke about, some of the PSU stocks with Mr. Kedia as well, but RVNL today is fairly upbeat. Within the railway stocks, how is RVNL stacking up now?
So you are talking about RVNL, right?
RVNL.
Yeah, so RVNL, I think some sort of recovery could be there. I'm waiting for a decisive move about 250. About 250, it can head towards 265, 270.
All right. Want to get in your thoughts on a DMART. There is a brokerage report on DMART, fairly upbeat report. So, of course, the stock has corrected quite a bit. Although, it is holding on to 4,100 now. Today, it's up 2%. Would you be watching out for 4,200 kind of levels anytime soon? Chandan, is my voice reaching? Achha. Okay, I think there's been some technical issue on Chandan's feed, but I think with that we are, timed out on this edition of Opening Bell. Looking at the markets, we are cruising above that 22,000 mark. Sensex also holding on to that 72,600 mark. Mid and small caps looking extremely strong, 1.5% kind of gains coming in on both the indices. Bank Nifty has made a good rebound, inching towards 47,000, and metal stocks in fine fettle. So all in all, a sea of green across the screen. Let's see whether or not it lasts throughout the day or not. Given the fact that we have been fairly volatile over the last a few weeks. But with that completely timed out on this edition of Opening Bell, from me and the entire team, thanks a lot for tuning in. Have a good day and stay tuned to Money Control for all your other news and updates.